700 trillion, say, of fiat denominated assets, cash, stocks, bonds, and real estate. Maybe these are round numbers. Maybe 350 trillion of that is cash and stocks. Piece of it, 350 is real estate. Okay, so Bitcoin's total market cap today is 1.3 trillion. Of course, not all that's for sale, but that is. So the 1.3 over 350. I mean, what is that, like 1/3% of the total money out there? And so some of that 350 is going to realize that they're being debased, and the only way to protect themselves, and the best way to protect themselves, is Bitcoin. And they're going to start coming in and try and buy some pro rata share of Bitcoin. And what they're going to find is it's hard to buy, and hard to buy without shoving up the price. But they are going to shove up the price. And we're going to go through 100, then we're going to go through 200, then we're going to go through 400, we're going to go through 1 million, and eventually, we could go to 100 million, which is full hyperbitcoinization. I'm not sure if we'll get there, when we'll get there. They might do a monetary reset before that, but I could easily see 2, 3, 4, million per coin. And the next 10 years are really going to be the great gold rush years for this. It's because we're kind of at the 10% adoption point, so we're now going to adoption is going to accelerate. I hope more people wake up to it, because
Lepard begins by reflecting on the staggering scale of fiat-denominated assets in the global economy. With estimates ranging around $700 trillion, including cash, stocks, bonds, and real estate, he highlights the vast pool of wealth that could potentially flow into Bitcoin. Of this, approximately $350 trillion is in more liquid forms, such as cash and stocks. Bitcoin's market cap, currently sitting at around $1.3 trillion, is a mere fraction less than 1/3% of this enormous sum. This disparity, according to Lepard, underscores the massive upside potential for Bitcoin as more of these assets begin to shift into the cryptocurrency space. The crux of Lepard's argument lies in the concept of Bitcoin as a hedge against the debasement of fiat currencies. As governments continue to print money and inflate their currencies, more investors are likely to seek refuge in assets that are immune to such devaluation. Bitcoin, with its fixed supply and deflationary nature, presents itself as the ideal candidate. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
This whole ETF thing has really caused me, it's kind of blown my mind and caused me to think more bullish about this than I was before. I mean, I was bullish, but not as bullish as I am now. Let me take you through the math. 700 trillion, say, of fiat denominated assets, cash, stocks, bonds, and real estate. These are round numbers. Maybe 350 trillion of that is cash and stocks. Piece of it, 350 is real estate. Okay, so Bitcoin's total market cap today is 1.3 trillion. Of course, not all that's for sale, but that is. So the 1.3 over 350. I mean, what is that, like 1/3% of the total money out there? And so some of that 350 is going to realize that they're being debased, and the only way to protect themselves, or the best way to protect themselves, is Bitcoin. And they're going to start coming in and try and buy some pro rata share of Bitcoin. And what they're going to find is it's hard to buy, and hard to buy without shoving up the price. But they are going to shove up the price. And even if you only took, say the bond market is 100, say the bond market's $100 trillion. Okay, worldwide bond market. Let's say if only 10% of the bond market comes and says, you know what, we need to hedge against this, we need to get some Bitcoin. Well, that's $10 trillion. That's 10x where we are to almost 10x where we are today. And by the way, all of that 1.3 is not for sale. I mean, so that gets you from 60 some odd thousand to 600,000. If it were just a straight 1-for-1 multiplier, but it's not. It's better than that, because if you look at, and I found this fascinating. Fred Krueger on Twitter has done some great work on this. Everyone recommend you follow him. It's at Krueger. $8 billion has gone into Bitcoin since the ETFs got formed. These numbers are a few days old. Bitcoin has gone up in value by $300 billion. It went from roughly a trillion to 1.3 trillion. So that would imply that 8 trillion of new flows has shoved the overall value of the asset up by 300. So that's a 37x multiplier. Now, I'm not saying that the multiplier will always be there. And, what do you mean by multiplier? Well, what I mean is that, as 8 billion tried to buy it, there just wasn't enough available supply, to convince people to sell it. It had to go up that amount. And so now think about this, there's 100 billion of bonds and 100 trillion of bonds, and 10 trillion might come after this. Even if only 1 trillion came after this, you would, and let's say the multiplier is not 37. That's exaggerated right now because, we're just starting and, the ETFs are a new thing. Let's say it goes down to 5 or 10. It would still, represent just enormous growth. I mean, if 1 trillion of bonds comes after this, that's, 10 trillion, the thing needs to go up by. Again, you kind of get to 500,000 or 600,000 a coin. So, I mean, I see a world where, we're going to go through 100, then we're going to go through 200, then we're going to go through 400, we're going to go through 1 million, and eventually, we could go to 100 million, which is full hyperbitcoinization. I'm not sure if we'll get there and when we'll get there. They might do a monetary reset before that, but I could easily see 2, 3, 4, million per coin, which is serious money. So the ETF thing has really, it's and Saylor predicted this. He did a great job of saying, hey folks, this is one of the few chances in history to front run Wall Street, because they just don't understand it. And once it becomes obvious to everybody that this is a better form of money, which it is, because it can't be debased and it's algorithmically programmed to, expand at a asymptotically decreasing rate, then, it's kind of game over for other currencies. And as Saylor also pointed out when he made a speech on stage in Madeira, he said, the next 10 years are really going to be the great gold rush years for this. It's, because we're kind of at the 10% adoption point. So we're now going to really, adoption is going to accelerate. And we're also, we've still got mining reward, 6.25 today, soon to be 3.125, et cetera, et cetera. And until 2034, there will be decent mining reward. In 2034, 99% of the Bitcoin that's ever going to be mined will have been mined. And there'll only be 1% left, and it takes another 100 years for the balance. So at that point, effectively, you've got, a stock to flow there's almost no flow. When you got 1% coming in over the course of a year or 100 years, that's not much flow. So it becomes incredibly hard money at that stage. And, it's going to be much, much higher than it is today. I hope more people wake up to it because, and the reason I'm such a big advocate for it is I know it'll make the world a better place. And, I think it's important. I want to try and save people from, dying in the legacy system, because the legacy system is going to die. And there will be pain for people, which is sad, but it just is. And, just like there was pain. If you were in the buggy whip business and the automobile got introduced, you were fucked. Or if you're making, buggy, carriages, you're making horse-drawn carriages, you were fucked. It happens. It's sorry, but that's how it happens. And it's kind of a similar model here.
Lepard is realistic about the challenges Bitcoin may face. He acknowledges the possibility of government intervention, such as the imposition of heavy taxes or even attempts to confiscate Bitcoin holdings, akin to the infamous Executive Order 16102 in the United States, which required citizens to turn in their gold. However, he argues that such measures are unlikely in the near term, as Bitcoin is not yet seen as an existential threat to the fiat system. Over time, as Bitcoin's value and influence grow, this perception may change, leading to more aggressive government actions.
The approval of the ETFs was an enormous thing because for traditional financial people, for traditional fund managers, it removed what, in their mind, I think, in many cases, was the largest risk associated with Bitcoin, which is to say, the government hates it. Yeah, that's great. It's all cool, but the government hates it. They're going to shut this thing down. And we can't, how can I buy something I know the government's going to shut down? Well, guess what? They didn't. And I have to say, honestly, I was very pleasantly surprised. I thought the ETFs were going to get delayed, not approved. etc. And I think what it maybe shows you is the power of a BlackRock and all their money and all their lobbying. I mean, they realized they could make money on it and they pushed it through somehow. So here we are, we've got them. That's great, and that provides some regulatory clarity to a lot of fund managers, to a lot of people. Are kind of like, well, look, if the government hated it, why did they let the ETFs get created? And so to me, that's a real big change. And of course, we've seen the response in the price and the flows. We'll talk about that in a minute. And so I think in the short run, there's really, and the other thing is, keep in mind that what it does is it allows them to also have it within their box or within their system. And so there may have been, they may have been game theorying it and thinking, okay, all these people are buying it and self-custodying it, which Elizabeth Warren hates. And we can't see it when it's on somebody's Trezor. We don't know who the hell has what. I mean, we can KYC it and see where it came from, but as you know, it's kind of hard to keep track.
Right.
And if we approve the ETF, at least we'll be able to see it and tax it. So better inside the fence than outside the fence. And so they, if you're being real conspiratorial, they think, well, let's get all these guys inside the fence, so at least we can see them. But I certainly don't think they're going to flip flop anytime soon and go negative on Bitcoin. I think Elizabeth Warren, she wants to prevent all self-custody. I don't think she'll succeed at that. She might succeed, though, at causing all of us to have to report what we own. As you'll recall, we had to check a box on our taxes that said we've been dealing in crypto. Yeah. And it strikes me that this is very similar to when they made us report our Swiss bank accounts. That they don't want people dodging taxes, so if you own it, they want you to report it. So I could actually see them doing some law like that. But so let's talk longer term though about 6102. I don't think today, it's going up, it's working, it's a good investment, etc. But it doesn't appear to most of them today to be an existential threat. I mean, you and I both know it is an existential threat, and that eventually it's going to eat the entire fiat world, and we're going to be denominating our lives in sats. Okay, we know that, but they don't know that yet. But they're going to learn that as they watch the prices go up. And yeah, I mean, there are guys like Joe Carlasari, who's active on Bitcoin Twitter, who trusts the government, I think, and believes that they would never do a 6102. That's something odd in the past. To which I just say absolute and utter bullshit. I mean, they changed the short selling rules in 2008. They changed the rules in March of 2023 for Silicon Valley. I mean, they change the rules whenever it suits their purposes, and they need to keep their system going, and their system's broken. And when it becomes very, very clear that Bitcoin is eating their system and helping to cause their system to fail, I think entirely they will, either 6102 it or 90% tax it, or whatever it is they do to it. It'll be the Save American Currency Act. And they'll figure out a way to determine that we're all evil people who are ruining their currency. But I think that's a ways out, because that's not obvious today. I mean, it'll become more obvious over time. What are the odds on that? How do I rate that? I don't know. I really don't. It's probably 50-50. I mean, but I do know that those who are on the inside and who control the system, they just have an enormous vested interest in not having us succeed. Because if we succeed, all fiat wealth goes to zero, and so they can't really stop us. I mean, and they can't really stop the system; it's too distributed, etc. So they've got a problem on their hands now. The other tool I think they'll use to mess us up, and they use this in gold a bit too, is they will. What's the only thing that's left wrong with Bitcoin? And I don't think it's something that's really wrong, but I think to an outsider or to a newbie or to a traditional finance person, it's wrong.
Lepard remains optimistic about Bitcoin's future. He sees it as an unstoppable force that will ultimately reshape the global financial system. The decentralized nature of Bitcoin, combined with its hard money properties, makes it resilient against attempts to control or suppress it. As more people recognize Bitcoin's value proposition, Lepard believes that its adoption will continue to accelerate, leading to a future where Bitcoin becomes the standard by which all other currencies are measured. Please like and subscribe my channel.